Morning, good morning. This is David Hunt coming to you live from profithunters.eu. And disclaimers and warnings on here. Now, don't normally do this live. We've seen a bit of action in the commodities. We've got some bear paws warnings and bull horns warnings. We've been through the drill and a quick look at some what's going on in a few of the major commodities for you before we do anything like this. The forecast is now loaded up today, and from last night, if you want to go to that, go and have a look at the Australian profithunters.com.au and look for the recordings section. Okay, so what's gone on in the US markets? Well, we've had some fairly big news. The US Federal Reserve is now going to be announced that it is going to be buying in the primary and second market corporate credit facilities, and what they're doing now is they're looking to give credit to large employers for bond and syndicated loan issuance. So it'll give them access to credit directly from the Federal Reserve, and then they'll also start to be buying corporate bonds from the Fed. So then the next series is they're going to start beginning to buy eligible ETFs. Don't know what eligible means. Usually that will mean ETFs run by BlackRock, and we might find out what that might delve a little bit deeper. We've seen Apple issue corporate bonds for the purposes of buying back its stocks. In other words, they're trying to support the price of Apple, so that doesn't impact on your pension funds and wealth feeling if you own Apple. So basically that also gives the ability for governments to pick up and make some money out of the bonds, out of the ETFs, if the stock prices go higher. So here's a disclaimer and warning. Just remember that this is under corporate authorised representative 289519 of Alpha Securities, AFSL 330757. It's general advice and does not take into account your investment objectives, financial situations or particular needs. Before seeking advice, you should obtain and consider your broker's FSG and consider the PDS available from alphasecurities.com. The big news is that Warren Buffett has increased his cash holdings by selling out of airlines, and that has completed a depressing effect. So Berkshire Hathaway cash and short-term investments are up to $137 billion at the end of May, which is a month ago. So Buffett sold $6.5 billion in equities, mostly airlines, in April. So I analysed that last night in the forecast. If you want that, go to profithunters.com. So look forward at where the markets are going on the bigger picture. Now, yesterday the news hit the markets that Buffett had sold. That forced some selling in Europe. We noticed that the E-mini S&P is a guideline for the S&P 500. We can see that it's rallied back up to be 28.5. It had a low of 27.71 yesterday in the Asian time period. The buying was not strong according to the volume that we are seeing today. Quick look at at the moment, the news that the Federal Reserve is buying ETFs, which should feed through to the to the stock market, because ETFs tend to buy stocks, was not met well. The Dow Transports, they found support, yes. The volume was high on the downside. A breakdown below yesterday's low is completely negative, with a breakdown below 78.63. If you are looking to buy this, you probably saw an opportunity to buy with a stop loss below that 78.63 area today. I'd prefer to see some real signs of strength. There are 3 gaps down, and it's not normally a good thing for this. I don't think that we should be rushing out and buying stocks aggressively, even if the Federal Reserve is buying. In terms of the Dow Jones Industrial Average, it's been falling on decreasing volume, so at the moment I can't get super bearish on the Dow itself. On the Nasdaq tends to benefit from ETFs more than any other ones, because they prefer to buy them because of the FANGs and all that sort of stuff. So ETF, probably the preferred ETFs will be buying those stocks. Before this news that the Fed are buying ETFs, I would have told you the Nasdaq is weak. It may not be as strong as it should be, because everybody seems to be overloaded on these tech stocks. But the Fed's targeting, supporting, like Mark Zuckerberg, Bill Gates, Jeff Bezos, these actions, because they need to. They need to support these guys, because those guys are the ones that have a lot of money, and the Fed wants jobs. Federal Reserve people want to get jobs from rich people when they get out of the public service. Okay, so at the moment it's a bit com si com sa. We saw the German DAX get hit last on trading session last night, and it stayed down. The news of the Fed brought the market back up. Am I a total bull at the moment? I just can't get screamingly bullish. We'll have a look at the Australian shares price index futures. And the Australian share price index futures have really done nothing overnight. A little bit of a rally up, high of 53.60, close at 53.35. Shows a little bit of strength. It's sort of stuck between a rock and a hard place. The tendency would be to believe the Fed will hold the market up, and that is fund managers and things. They threw a lifeline. Buffett, they're trying to stop the world getting Buffett out. Buffett's depression was met by the Federal Reserve's spending of money. How long this can last is anyone's guess, because they can print money as long as they want. One of the biggest experiments in printing of money and buying ETFs has been the Japanese Nikkei, and as you can see, the Japanese Ministry of Finance and Central Bank basically got the Nikkei stock market up to 24,000 by its purchasing of ETFs, and recently it's declined like any other stock market. So buying of ETFs is a temporary measure to try and get everything looking rosy and good and everyone feeling. At the moment, I don't think it's the best best policy. They've got to get better policies. It's the same thing as what we had before, only magnified. Let's look at gold. Gold's in a triangle. This will go higher. Silver. Silver's had a few bad days. Kind of inside days. If gold goes higher, silver will probably follow eventually. I want to have a look at the Robusta coffee. Robusta coffee has had some limit up days, it looks like. This is 10-ton Robusta coffee on the ICL. Clearing above 1183, looks for 1231. Strong. Let's have a look at the counterpart, which is Arabica, which is a KC contract. And Arabica is just trying to bottom out a bit. Really looking for probably around about 111.34 on the top side for this. Had some good trades on, particularly on orange juice. That's good. We can now raise our stop loss up to 108.91. We're long from down here, so we're happy. Cotton's got nothing. We're long. Sugar was one. Sugar's one we're in. And carp, a little bit of a pullback over the last couple of days. It's resting on the old bottoms. We're long from 1050, basically where it is now, and 1070. So a little bit underwater on the net position on the close. We will not change our stop loss. Okay, I think that's probably about it. 30-year bond yields, they're starting to creep up again. We are currently short the US 30-year bonds. And it's kind of doing nothing really. Yields are up a bit, but nothing to really write home about. Okay, that's it from me. I think that will leave that. And had some fun. Let me know if you've got any questions. No.